How many shares of Google would it take to retire in 2030? That's the question that today's video is going to answer. Now, I've already done similar calculations for Tesla stock, for Palantir stock, and also for Ethereum. Well, today is Google's turn. So let me break it down for you and show you exactly how many shares you might need to retire in 2030. For starters, we've got this valuation model right here with 4 different possible scenarios for what Google could be worth by 2030. We've got the bear case, the base case, the bull case, and finally the super bull case. And each of these different scenarios relies on a different valuation model to try and figure out what Google could be worth by 2030, and then to work backwards from there to figure out exactly how many shares you would need to own in order to actually comfortably retire. Now you can see right at the top that the nominal goal for 2030 in terms of how much money we want to have invested in the company is $1.3 million. And I've also baked in a 10% contingency so that we're actually trying to hit a $1.43 million figure invested in Google by 2030 in order to be able to comfortably retire. Now, in case you're wondering just how I arrived at that figure, let me show you the math. So, according to statistics, the average household living expenses in the US today is around $5,000 per month. However, of course, we know that inflation has been increasing and is likely going to continue increasing for the foreseeable future. And so we need to figure out what it might actually cost per month to live in 2030, and then we can use that figure and adjust for future inflation to try and figure out approximately how much money we'd need to have to retire. And so this model here is using some relatively conservative numbers because, for example, I'm assuming that there's going to be 5% per year inflation between today and 2030, which is probably a little bit on the high end because we are seeing some high inflation right now, but it's unlikely that governments and central banks in the US and also around the world are going to allow that really elevated level of inflation to continue for a very long period of time. So assuming 5% per year between now and 2030, I think is relatively conservative. But if we worked with that figure, that means that the average monthly expenses by 2030 would be around $7,500 US, and on an annual basis, that would be approximately $90,000. Now, the average length of retirement in the US is only actually 18 years, but I think everybody wants to retire at least a little bit early. So in this model, we're assuming that we're gonna spend 30 years in retirement. And in order to do that, we're gonna have to have $2.7 million in 2030 dollars to spend over the course of our retirement. And this is adjusted for inflation post 2030 because I'm also factoring in a perpetual growth rate of 6% per year of this invested amount. Now what this is a actually conservative estimate taken from the average S&P 500 ROI, which is approximately 8.29% per year after being adjusted for inflation. And so I'm actually knocking off a couple percentage points from that to be even more conservative, even though Google is probably likely to outperform the S&P 500 index because it's one of the better companies in it. And for a nice visualization of what that actually looks like, you can see from this retirement calculator here how it works. You start with $1.3 million, you have that 6% per year rate of return, and you're withdrawing $7,500 per month. Keep in mind, again, this is all in 2030 dollars. And so over time, you draw down the balance of your investment. And so this is why by starting with only $1.3 million invested in 2030, you can actually afford to spend well over $2.5 million because the amount that you have invested is still going to continue growing and have that snowball effect or compounding interest effect. And going back to the valuation model, again, another conservative estimate that I've included in here is by accounting for that 10% contingency, which is sort of a margin of error to protect against any unforeseen downturns. And so we're actually aiming to have $1.43 million invested by 2030. Well, what would that look like in terms of how many Google shares would we need? Well, of course, that is going to depend on what Google, the company, is going to be worth by 2030. And there's lots of people making different predictions. And so I've actually pulled 4 different valuation models here to try to model 4 different scenarios for what that might look like. Now, starting with the bear case, this is a very conservative estimate. I've never actually seen anybody making projections as low as this, but I wanted to factor this in. So in the bear case, we're looking at a 5% per year growth average between now and 2030, which of course is much less than the average S&P 500 rate of return, which is actually over 8% after adjusting for inflation. So by assuming a 5% per year growth between today and 2030, we've got a pretty conservative model in there. And if that were the case, the price per share of Google by 2030 would be $3,400. And that means that in order to have $1.43 million invested, you would need to have 421 shares at today's current share count. Now, you may have seen that Google recently announced a potential 20-to-1 stock split that's probably going to happen sometime this summer. Well, after that happens, the number of shares that you'd need to retire actually bumps up from 421 to 8,412. However, it doesn't actually increase the total amount that you need to spend to retire because, of course, the price of those shares is going to be reduced to 1/20th of the current value. And so that means that at today's prices, where Google shares are trading at around $2,400 US, you would need to spend approximately $1 million US in order to purchase the number of shares required to be able to retire in 2030. Now, that probably doesn't seem very feasible or very realistic, but it's important to remember here that this is the bear case, and of all the analyst projections and models that I looked at in the research for this video, I haven't seen a single one that says that Google stock could be worth as little as this by 2030. So let's move on now to the base case model. And from this point, it becomes progressively easier to retire depending on which scenario you think is most likely to come to pass. Well, in the base case model, I pulled this valuation figure from the Seeking Alpha article done by f.i.r.e Investment Research. And I'm going to throw a link in the description box to this spreadsheet, which also has the sources listed so you can check those out and verify for yourself. Anyways, f.i.r.e Investment Research has this model here where they suggest that by 2030, the fair value of the company would be around $4,160 per share. And so if that were the case, that means that you would only need 344 shares pre-split to retire, or 6,875 shares post-split. And at today's prices, that would cost you approximately $822,000. Well, if that still seems out of reach, let's move now to the bull case scenario, because this is where it starts to get more interesting. This valuation model is coming from a Yahoo Finance article that was co-written by Simply Wall Street, and they have crunched the numbers using free cash flow forecasts, and using these projections, they determined that Google could be worth around $4 trillion by 2030. And if that were the case, the price per share would be around $6,000, which means you'd need 238 shares pre-split or 4,767 shares post-split, which currently today would cost you around $570,000. And if that's still not bullish enough for you, the Super Bull valuation model, which comes from the financial investment analysis of the stock, and they're projecting that Google could hit $5,000 per share by 2025. Now, they haven't extended their projections beyond 2025 to 2030, but even if we took that $5,000 per share figure in 2025 and then applied the average S&P 500 growth rate to 2030, that would mean that Google's market cap would be around $5 trillion and the price per share would be around $7,500. And if that came to pass, you would only need 191 shares pre-split or 3,813 shares post-split in order to retire, which currently would cost you around $450,000. So those are the numbers for how many Google shares you might need to retire by 2030, based on 4 different valuation models for what the company could be worth in the next 8 to 10 years. Now, if you watched my other retire on videos like Palantir or Ethereum, you might have noticed that it actually takes much less upfront capital if those valuation models actually pan out. And the reason for that is that Google is a very well-established company that has already seized a significant percentage of the market globally in a lot of its business ventures. And so it's a little bit more difficult for them to continue to scale at the same level as they did when they were an early stage growth company. And so that's why from this point forward, even though Google's a very profitable company, it's slightly less likely to 10x than other companies that still have significant growth potential. Anyways, thanks so much for watching. I hope you enjoyed this video. If you did, you might also like this one or this one. Have a great day.